Tasha, at ARK, this is one of your biggest holdings, Tesla. It's an important one for what you have. Why do you have conviction, and what do you think is going right with this company right now?
So at ARK Invest, we focus on innovation. So that's what this is. It's an innovation story. And I think right now people are misunderstanding that. When you look at Tesla and you think about sort of the most common bear thesis, it's that there's no demand for the vehicle. That's absolutely insane. I mean, we found out in the first quarter that over 69% of trade-ins for the Model 3, for the standard range version, were non-premium vehicles. So they're pulling in demand from other segments. They outsold their next best competitor by 60% in the premium vehicle segment. I mean, people clearly like these cars, and for a good reason. I mean, Tesla has a software advantage that no one else can beat.
Under Elon Musk's own admissions in the letter he sent to staff yesterday, the email he sent to staff, though, they are running behind the targets. And I think that becomes a question. When you have a big valuation, you have a fast cash burn, and you're not meeting your own expected deliveries.
Yeah, I mean, so first we know that Elon Musk sets extremely aggressive goals, right? I mean, that's sort of Tesla's MO, to set this really aggressive goal, and then you do everything you can to meet it, and often they actually fall short of it. But in doing that and sort of pushing to that target, they've been able to achieve the impossible so far. If we talk about cash and those worries, I mean, in our valuation model, we actually expect, we have Tesla raising an additional $10 to $20 billion in the next 5 years. Wow. And we're actually okay with that, because we want them to get as many cars on the road as possible.
That dilutes your position pretty significantly, though.
Yes, and we'd be okay with that dilution because every car acts like an R&D center for Tesla. So we just want them to produce as many cars as they can, get them out there, and then run a fully autonomous taxi network, because that's the largest opportunity.
But what do you think is a fair price for the company, then? The stock?
Yeah, so in our bear case, which assumes no autonomous at all, that's $560 in 5 years. Right. Our bull case, we actually think it could go north of 4,000, and that's with autonomous driving.
And were you surprised about the demand fall off after December?
You know, they had obviously logistics issues with deliveries, so we would have expected that.
But you put it all onto logistics. You don't believe there's any demand issue at all.
No, I think
that they are just underproducing, and if they could just produce as many cars as possible, they could sell every single one of them. That's humanly. Humanly buildable.
Yeah, I mean, and the question is, like, what are you expecting that? How far do you expect them to fall, considering that it was, you know, the top revenue-grossing car in the U.S. last year? I mean, it's hard to say that all of a sudden there would be an.
Bryce, what's your?
That chart doesn't say anything to you, Tasha? Does it indicate anything? I mean, it just sounds like a story. 4,000. I mean, that just sounds like a story stock. Autonomous taxi. I mean, can you really balance your checkbook with you know, sort of pie in the sky, you know, sort of predictions like that, or?
You know, so I'd like to talk about sort of the EV market in general. Again, this issue of I'd like to talk about the EV market in general. And this issue, again, of people thinking that there's no demand for these cars. I mean, we think that.
I heard you say that about demand. What's the stop? What do you attribute that chart to?
The Tesla chart, the price chart.
The Tesla chart.
Yeah, I think that's people misunderstanding the Tesla story. I think people are.
I agree. I agree 100%. You know, target schmargets. We want our automatic electric fleet of taxis. Don't you want that? Everybody wants that.
But I want a Jetson car.
You have to
believe with the same sound.
Elon Musk is trying to make you.
I'm not going to go long yet on the Jetson car.
Listen, she's completely right. The future is going to be Tesla cars everywhere, driving us wherever you want to go. You're going to go on your app. You're going to say, Tesla car, get me. It's going to pick you up and take you there.
This is the thing that I don't understand. The thing I don't understand is let's assume that the future of the world is EV cars.
Yes.
And let's assume that the world is robo-taxis, okay? Yeah. But let's start with the EV cars. What percentage of the market does Tesla have to be to make all this work? Because it sounds to me like we're talking that they're going to own 50% of the business, which is a huge part of the business. I don't know. There's very few industries where somebody literally, unless you're Facebook, controls 50% of the business. So you start there. Then the second piece is you get into the robo-taxi front, and you say to yourself, okay, there's Uber who's running around, there's Lyft who's running around, there's Waymo who's running around, there's Cruise running around, there's everybody in China who's trying to do this. And I'm not dismissing. I think Tesla may actually be advanced in some ways, but also, you know, there's questions about LiDAR. There's all sorts of things going on here. And so there's a huge risk element putting aside everything else that people question about Tesla.
Yeah, so I'd like to touch on that because I don't think they'll have 50% share of the market. I think that EVs will surprise. Our forecast for EVs is that there'll be 26 million sold in 2023. That's much higher than people expect, and it's because battery costs are declining. So there's going to be this crossover point where an EV is actually cheaper than an ICE car, and that's what's going to cause this demand uptick. So we're actually thinking that Tesla's market share right now is 17% of the overall market. In our bear case, that goes to just
70% of the overall EV market.
EV market.
Right. Okay.
Yes.
Not all cars.
No.
It's a small piece. Of
exactly.
It, right?
And that's another great point that EVs are a very small percentage of all cars sold right now. So our bear case is that they'll go to 6% market share, and our bull case is that they'll go to 11%. Again, that's down from 17. And then when you look at the autonomous market, sure, there's competition, but no one can match Tesla's data advantage. Waymo's missed timelines. Cruise, Mary Barra will not reiterate that they're going to launch in 2019. Right. It just seems like, this is a very difficult problem to solve, and with Tesla's data set, they're best positioned to do so.
Let's bring in Tasha Keeney, an analyst at ARK Invest, who covers industrial innovation, autonomous driving, and 3D printing. What should we be thinking about now with Tesla?
Well, I think there's too much focus on the delivery figures, right? So at ARK Invest, we look at Tesla and we see it's a long-term play. So we have a 5-year time horizon on all of our investments, and it's really an autonomous electric vehicle company. And when we talk about competition, we think Tesla is at least 3 years ahead on both autonomous and electric. And it's really just a good thing that other players are coming into the market. It validates the space.
But how can you guys have like a $4,000 price target on the stock, don't you?
Yes, we think it could actually go north of 4,000.
But how can you say don't pay attention to arguably the most important thing that Tesla does, and that's make and deliver vehicles?
Well, that is the most important thing that Tesla does. But so one, the $4,000 price target, that is really looking at the autonomous vehicle business combined with the electric business. But in general, I think what most people are missing is that the electric vehicle market we think it's going to be huge. We think there could be 26 million EVs sold globally in the next 5 years. That's up from 1.4 million today. And let's not forget, that's out of 86 million, right? So it's off of, the penetration rates today are relatively low, and we think that market could be big. So we think Tesla will maintain a position in the market. We do expect their share to shrink, but right now they have the best performing and most efficient EVs on the market. And we see the numbers showing us that. 60% of trade-ins for the Model 3 were from the non-premium segment.
Tasha, do you think that the company's technology has been ahead of the competition for a long time? When you look at the operation dynamics and the balance sheet of the company, do you think they can make it 5 years? I mean, honestly, that's what the market is challenging right now. There's been a semi-restructuring going on as almost you see Elon Musk talking about whether they're cutting back this or that. CapEx should not be being cut back for a growth company.
Yeah, so Tesla did a raise earlier this year, right? Actually, in our valuation model, we're factoring in an additional, say, $10 to $20 billion. And we'd actually be happy with that dilution because it means they get more cars on the road, which is ultimately what we want. We want them to get at scale when they launch autonomous.
What do you think's holding that? I think you're right. I think they should just get on with raising money, and maybe should have done it a couple of years ago. Is it just because the valuation's not where they want it right now? Because it seems like they need that money.
Yeah, well, again, they did the raise this year, so they're probably good for the near term, certainly for the cash requirements that they have ahead of them for 2019. Right. But yeah, I think, in the future, they could be waiting for a good buy point. But I think the greater picture is, again, we'd be okay with them raising that capital in the equity markets because we think this is such a large opportunity. We think that autonomous driving should be valued at $2 trillion today in the equity markets, and it's virtually unaccounted for.
So Tasha, you just mentioned that about autonomy for these guys. Their program has been controversial, right? And so, obviously you're trying to get EV to a certain production level, which gives them the ability to kind of move forward on autonomy. But how do you guys see it? I mean, because, it seems like the headlines on autonomy right now are not good, and it might really kind of hold investors back a little bit.
Yeah, so there's this idea that autonomy is scary, right? And I'm not going to say that, one bad headline couldn't, push back the industry, say, 6 months. But we think ultimately, we're already seeing signs that cars with autopilot are safer than cars without it. NHTSA has come out and said that. They've done an independent study. So we actually think that autonomous vehicles will be 80% safer than a human-driven car. And what's ultimately going to cause the adoption of these is really price. So we think that the at scale, the price of an autonomous taxi could be just 22 cents per mile to the consumer. That's down from, say, $2.50 per mile today that Uber and Lyft charge. So that dramatic reduction is what's going to make people adopt this service.
Tasha, we appreciate it very much.
Thanks,
all right, Tasha Keeney with ARK Investments.
Tesla CEO Elon Musk rallying shareholders this week, saying that the company is on track to hit its production goals. But analysts remain divided. Kathy Wood is the CEO of ARK Invest, and she is very bullish on Tesla. In fact, you've got a $4,000 price target, Kathy. Why is it that this is your top holding in your fund?
Well, it's the most misunderstood stock, I believe, out there, much like Amazon was in the day. You know, there was a whack-a-mole moment or a 4-year period in Amazon's life. Today, in hindsight, it looks obvious what was going to happen to retail. We think the same will be true. This is a 4 to 5 year big trading range. Whack-a-mole, couldn't do production, couldn't do the demand wasn't there, don't have enough cash. Every time they fix something that the market is worried about, the bears go on to something else. This is very reminiscent of Amazon.
Your $4,000 price target, that's not a 12-month price target, right?
No, our time horizon is a 5-year time horizon, and that's a big difference between the way we're looking at the world and the way most analysts are. They have a 1 to 2 year time horizon.
There's another analyst on the street who says that this is a binary situation. You could basically go much higher from here, or you could go to $10, I think was his price target on it, because a lot's going to depend on whether they can make it through the financing needs over the next year or two.
Yeah, we've assumed in our bear case, which is $560 in 5 years, $10 billion of dilution. You know, the markets are open. If we were talking about 08, 09, when the markets were shut down, that might be one thing. But the markets are open. And I think as they ramp production and as demand continues to surprise on the high side of expectations. First quarter was an anomaly because they were shipping to China and Europe. Now, the Chinese website, their website in China, went down because demand was so strong.
Although Elon himself said this week that while they don't have a demand problem, the problem or the hurdle that has to be reached at this point is that no one can afford their cars. That you know, its price is the big issue because you no longer, at least in the United States, have any of these incentives that used to be offered to the company.
So our analysis excludes subsidies and always has. The total cost of ownership today of a Model 3 is lower than a Toyota Camry, if you give us this 5-year time horizon. And most people hold their cars for 5 years. Total cost of, and I think more and more consumers are starting to do this arithmetic. I mean, I haven't gone to the gas station since I bought my Model 3 in September of last year. That's a huge change in my behavior. Since I was 16, I went once a week. So
here's what, at times I had thought about signing up to get on a list to try and get one of these Teslas. Here's what's held me back. Yes. The idea that there's not a dealership that I can take it to if it breaks. The idea that anything happens kind of down the road, it's on me. Or the idea that maybe I want to drive further. Now, he had said that they're going to have a 400-mile charge potentially coming up very soon. Yes. But the idea of not being able to get something fixed when it breaks, where do you take your car?
Well, first of all, in terms of their service issues, and this is very typical of
service issues, there is no service.
Well, no, yeah, there is. Actually, they anticipate problems and do over-the-air software updates before you even see them. To me, that is a much better solution than spending a day trying to get my car in and out of a dealer to get its service.
If it can be fixed over there.
And the other thing they're doing is they're setting up service vans so that they can come to your office or your home to fix the car. So it's a much better model than we have right now. Yeah, they have to perfect it, but I think they're absolutely doing the right thing.
I mean, you have time with your 5-year, you know, $4,000 target. It's hard to, you know, pin you down on something like that when you can go out 5 years. I mean, if you discount it into eternity, you could probably get to $1 million. But hopefully there is an afterlife. But in terms of last time you were on, you had some, what sounded to me, some crazy forecasts about autonomous taxis. They're going to be around like next month, according to you, right?
Yeah.
Or
No. In 2 years.
In 2 years,
yes.
Fully autonomous taxis replace everything.
Well, it's going to take time, and we need
2 years?
regulators.
See, we're going to know. We're going to know 2 years whether this is true or not.
Oh,
Kathy.
yes.
5 year, we don't know 4,000. But
if you were to drive in the Model S, as it's moving towards more and more autonomy, you would be really surprised. Changing lanes, getting off highways, even at intersections now. So Tasha, our analyst, went to drive in one of these test or pilot models and was shocked that there were construction sites. They were able to maneuver around them without an engineer taking the wheel. So I think they're well in this way.
To assume that regulators are going to allow this when you're reading headlines today about New York City putting additional restrictions on Uber and Lyft cars and where they can drive and when.
So regulators are very data driven. There are 35 to 40,000.
Regulators are very behind the time on anything.
35 to 40,000 lives lost every year here in the United States. 1.25 million worldwide.
I agree with you on this point.
They are already saying that if you own a Tesla, you are 40% less likely to get into an accident. That's the regulator saying it.
What regulator?
I think it was the National Highway and Transportation Safety Board. After the first fatality, that was their analysis.
That was their analysis.
Yes. And I want to go back to exponential growth, which is what we're talking about here. If you look at the first quarter numbers, and they were lower than expected because the deliveries to China and Europe were taking some time just to get there. The Model 3 sold 50,000 units. The Bolt sold 5,000. A year ago, the Bolt sold 5,000, so that was flat year over year. The Model S last year was at a higher base than the Bolt, 8,600, and was up sixfold to 50,000. They're doing something right. They're doing something right. People love these cars.
So at ARK Invest, we're long-term investors. So any one quarter, shouldn't change our long-term thesis too much. I think what we're excited to hear about on this call, first we'd love to hear an update on the full self-driving program, what kind of progress they think they're making with that. They've said that by the end of 2019 they'll be feature complete, launching commercial service in 2020 for autonomous taxis. Long term, we've looked at Tesla gross margins, which I think are a concern for investors this quarter. And we've actually predicted using Wright's law, which is a law that we use to predict many innovative technologies. We think by the end of 2020 that Tesla should be able to achieve a 30% gross margin on the Model 3.
You guys were selling shares, though, coming into the quarter, is that right?
Yes, I'm actually glad you brought that up. So this was more of a portfolio management thing. So in certain of our funds, the restrictions that our client accounts have mean that we have to sell once it gets to a certain percent. So we're allowed to buy up to 10% of the fund in any one name, and if it appreciates a great amount, then we'll sell off. So Tesla was actually up 30% relative to the other names in the fund, so we took profits.
So it was just an arbitrary kind of portfolio rule-based bit of trimming.
Exactly. It was not a change in conviction.
All right, well, Tesla right now is spiking. It's up 11% in the after-hours trade. We should have all of the details around that report in just a moment. But Tasha, how important is China to the story here?
I think China is very important. Tesla is an exponential growth story, and China hitting is what could sort of tick this off.
Yeah, the revenue, sorry to interrupt, Tasha, just want to mention some of these numbers as we wait for Phil to dive into them a little deeper. But the EPS of 78 cents is quite a significant beat in terms of what was expected. Revenue, $6.3 billion. That's essentially in line, down a little bit year over year. And we're looking...
Just look at the EBITDA margin of 13.9%. It was a big jump. Probably was where a lot of the numbers were made in the cash flow margin.
Stock up, as we said, 10.3%. In terms of the deliveries, what are you looking out for on that, Tasha?
Well, we already have the delivery numbers, so we know that those came in slightly below estimates. They were about 97,000 compared to, say, 99. But I think overall, revenue, we expected it to be a bit lower because of the Model 3. And again, those long-term margins are what we care about. So we think that, Tesla said they could achieve a 25% gross margin on these cars. We think it could be higher at 30. So we think this, EVs are really the long-term potential of the auto market. The auto market, sales are down, but electric vehicles are picking up, and Tesla's the leader in that market.
15% decline quarter over quarter in operating expenses. I mean, any sense of whether that was, well more exaggerated than you would expect? I mean, was that something you would have been looking for?
You know, I think that's certainly going to be a surprise for investors. Yeah. I think, you know, it goes to say that Tesla's really focused on these numbers. I think that one thing that I'd like to hear about on the call that's not talked about enough is the autonomous driving business, to go back to that. You know, I don't think any analysts are taking this into account. And we think this is a market that should be worth $2 trillion. It could add thousands of dollars to Tesla's stock price.
Phil LeBeau is back with us and has been diving through some of the numbers. Phil, what jumps out to you?
Well, Wilf, they're still kind of crunching the numbers back in the newsroom. You see this big spike here? That's because the adjusted EPS is $1.86 a share. We should point out that a number of analysts said that they expected a loss of 42 cents a share. So some of our folks who crunch the numbers are trying to reconcile the big difference there between the $1.86 adjusted, while many people were expecting a loss. Revenue, as you mentioned, did come in a tad under expectations at $6.30 billion. The automotive margins, GAAP automotive margins, 22.8%. And a couple of notes here regarding their production. Trial production in China from the plant in Shanghai, that has begun. Remember, they're expecting that to ramp up as we head into the end of the year and have some deliveries in China. And also, the Model Y is ahead of schedule. They are expecting production to begin by the summer of next year.
Kathy, I want to start with you because no one really expected Tesla to post a profit in this quarter. They did. How did they get there, and do you think that it's sustainable?
Yes, we think they're getting there because they are in such a nascent market right now that something called Wright's Law is at work. And that says for every cumulative doubling in units produced, costs decline at a similar percentage rate. In the case of Tesla and the auto industry generally, it's been 15%. So it made a lot of sense to us that the cost of the Model 3 came down by $2,000 per car. That's right in line with what we expected.
So they're becoming more efficient, Pierre, but we did see revenue decline in the quarter by about 8%. Is that concerning for a company that really, by and large, has traded as a growth company?
Yes, so I think at this point, revenues, like year-on-year revenues or quarter-on-quarter revenue growth really depends on how the ramp-up of Tesla as a manufacturing facility is stacking up. So it's not a big deal. What's really important is the fact that they produce less than 100,000 cars. Their flagship model, where usually all the profits are down from their peak by 40%. And their new high-volume car is barely 1 year old in terms of mass production. And despite that, they print a high-teen gross margin, which is like leading the pack in the industry. And they focus only on electric. And any other car manufacturer will tell you electric is not profitable yet. So that's where they're onto something. That's where the stock is squeezing up. They're onto something, and the street is now trying to figure out what it is.
And in terms of the street, obviously we've seen a huge reaction today. The stock up more than 16%, on pace for its best day since 2013. But you've also got a company with some of the highest short interest as a percentage of float of any company that's out there. About a quarter of Tesla stock is out on loan, in order to be sold short. So how much can we read into today's numbers, Kathy? Is this more of a just unwinding of some of the short positions that we might be seeing?
Sure. I think the shorts, some of the shorts are covering. They're stretching to make a negative case now. They're trying to figure out, is there some accounting gimmickry here that has caused this upside surprise? And as we dig through the accounting and the numbers generally, if you look at the revenue growth year to date, 21%, unit growth up 65% in an auto industry that is declining. We think total auto sales have peaked. So this is quite dramatic, and I think the shorts are going to be forced to cover as time goes on.
Well, unit growth is fine, but I thought the point was to create a car that they could make some money on, right? I mean, They keep getting cheaper and cheaper. What does that do to the long-term model? Yeah, their gross margins surprised considerably, up more than 300 basis points quarter to quarter. We think, and so they're at about 22.8%. If you exclude deferred revenue recognition and credits, it's still up 300 basis points to 19.7. We think that number goes to
30%, could go to 30% in the next year unless Tesla chooses to cut prices faster than they have been cutting them. And what's interesting about that is, given its lead in battery costs relative to any other electric car manufacturer, every other one will have to, if they want to keep up with Tesla, will have to sell their electric vehicles at a loss. At the same time, they're losing their internal combustion engine-driven business. So it's quite problematic for the rest of the auto sector.
Who's closest on their tail right now? Is it Volkswagen, Porsche? Who do you think they see first in the rearview mirror?
I think nobody's close, to be honest. Tesla introduced in the market the Model S 7 years ago. And today, in what manufacturers have on the road or have announced, nothing is matching the 2012 Tesla Model S. And the Model S of Tesla today is actually 40% better than 7 years ago. So that's how Tesla turned from being like a disruptive innovator 7 years ago to actually an industry leader. They have 7 years of experience others don't have, and I don't think anyone is close to them.
And one other thing I'd add is there's another leg to this story. It's really the most important leg. It's autonomous. And we think that Tesla will be, or is in the pole position to be, the autonomous taxi network here in the United States. The margins, you talk about margins, the margins on a transportation as a service business, they're in the 80s. The gross
why
margins.
Is that the case?
Why are they in the pole position?
Correct.
Yes. So they introduced, they're taking a leaf from Apple's book. They've introduced an artificial intelligence chip that, according to our analyst, James Wang, who worked at NVIDIA for 9 years, says is 4 years ahead of any other auto manufacturer's chip, AI chip. And he would know that because NVIDIA's.
Understood.
Okay. They also have 10 to 12 billion miles worth of real-world driving data.
Yeah.
That is more than every other auto manufacturer combined by a multiple. For example, Google's Waymo has somewhere in the 15 to 20 million miles of real-world data, not simulated. That's not going to work for artificial intelligence.
Right, because they've got it in all these cars that are out there.
Absolutely.